Greetings, everybody. This is Jeff Scott, and this is my top-down review for May 30th, 31st of 2021. Today is Sunday, the 30th, and tomorrow, Monday, will be Memorial Day. Happy Memorial Day to everybody, and thanks, as always, to those who continue to serve, have served, or whose fathers, brothers, grandfathers, etc. have served. I titled today, Time for a Summer Rally with a question mark. That to be defined as we go further. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. As always, I welcome comments, of course, positive more than negative, but how can I get better at what I do if I don't get the negative as well? And you can respond in the remarks section of YouTube or via email. Let's get rolling. Now remember, if you're watching this on YouTube, I record this in 4K, and somewhere down the lower right area of the video, there's a gear. And if you click on that gear, you can often change the resolution. As always, it's for educational purposes only. Any recommendations I make in the spirit of education should not be considered investment advice. I am a doctor, not a broker. I'm independent. I pay for the tools that I use. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. And if you are not a options maven, I highly suggest you go to the Options Industry Council or other excellent sites to learn about trading options. To me, options are a way of accelerating my income. But as I've learned over the years, can also accelerate my losses. I've learned from a number of people, everybody needs to have their own influences. As Ian Woodward in the upper left-hand quadrant used to tell me, he's not a guru, he teaches people to be their own guru. And I think that's the way it should be. Become your own guru, learn from smart people, and then put it together the way that works best for you. I own a lot of technology programs. Unlike clothes, you don't grow out of them. So you seem to accumulate them over time. And so I have a desktop littered with programs that I don't use anymore. You'll always find TradeStation and Thinkorswim open, and then other programs to supplement it. HGSI and Edgeradar are two of the best analytic programs in the market. The Cue tools integrate both as separate Excel spreadsheets powered by Reuters, which is the meta stock. This is Refinitiv now. And then Cue, it's got some integrated indicator sets within TradeStation and Metastock. And Dr. K's got some good tools as well. From time to time, some of these people will come and talk to you, either live on a video or something that I'll share with my members, big word, share with my viewers. I'm never paid if you buy something from somebody else. And so I am totally and humbly an unpaid volunteer, and this should just be considered education. The website for highgrowthstock.com, which I have no financial affiliation, is here. It's going to change one of these days. You'll go and it looks different. Free 30-day trial, not even requiring a credit card, and under investing strategies are hundreds of movies. Stock patterns are cyclical. Where are we? I basically said over the last several months, it's like we've truncated off the top of this, and we're sort of in a Darvis box. And, it really feels like that top is in, or we're near a top, and that we keep making assaults and fail. One of these days we are going to break. Do we break to set new highs? And that certainly wouldn't shock me. Nominal new highs into, the next month or so. But at some point, I think we're going to break and fall back. I think it's been a long time since we've had a sizable correction across all indexes. And this does feel a lot to me like a topping pattern. Now, it's much easier to know when this occurs. Market's been going flat for a long time. Everybody's sold off. We're done. We're upset. And then all of a sudden, the market breaks out. Think March 23rd, 2020. You ride this as fast and as hard as you can, and you'll see major gains. When the market rolls over, you'll probably know that too, because your count will get smaller every day. And if you are playing long when the market's falling down, you better hope they're contra ETFs, because everything else is going to fall to the long side. When you're up at the top, or frankly at the bottom before you started to move, you get a lot of chop. And when you're in chop, the market doesn't go anywhere, and often your account gets smaller. We're in chop. It's a hard place to make money. When you're in chop, you should be raising cash, having smaller positions, maybe even selling premium. And with record skew, as pointed out by one of the listeners, that means selling option premiums out of the money is probably a way you can make money. But keep in mind, somebody's buying those options, and even those options have a small percentage of turning into the money. They're betting that they will. And the option premiums are high enough that you want to keep them. But remember, somebody's on the other side of that option trade. In markets that are moving up, markets that are clearly moving down, I have different strategies. I'm in a very cautious mode right now. If one looks at the end of day Friday sector review, it's mostly green, but it's REITs. It's staple. Where's my staples? Here. We're good. Utilities. We're okay as well. Where are my utilities? Down here, all green except for one. Clearly a move into defensive on Friday. Now, it was a very strong week, and maybe this was just people getting defensive before the long weekend. But Friday felt to me like the weakest day of the week, certainly on the close. Now, let's take a look at the major market indexes. Let's pull up Thinkorswim. Let's go into the maximized view. So here is the S&P futures. So a very nice run from lower left to upper right. The high of the year was set back here in early May. And when I say sideways move, in reality, we actually broke out this week, nominally broke out above the prior highs over the last several days. But you can go back, really, we've been in this trading range for almost 2 months. We had this run up here, late March, early April. And then if I wanted to put a box around this area, we've been in this area since mid-April. So we've had 2 months, essentially, of going sideways. So what happens with each of these moves? You're probably losing money or chopping up. Hard market to make money. Sometimes cash is your friend. We look at the Nasdaq. Nasdaq's been chopping around. I mean, basically going back to the beginning of this year. You've had runs up and runs down, runs up and runs down. But if you go back and look at this bar here, which is January 8th, it really defines sort of the, well, not even the bottom of the box that we're in. So we've been sideways in the Nasdaq. So again, unless you are in and out of trades and a short-term trader, you're probably chopping around and seeing your portfolio get hurt. If I look at the Dow futures, let me make sure I get to maximize the length. You know, not as much chop, but certainly if you go back to this point here, about 6 weeks ago, you know, you had a big run up and a run down, but you're pretty much sideways as well. Again, did we break out at the end of this week? We'll see. If I look at the Russell futures, I don't need to convince you that you're sideways from here. Run up end of January, which has defined really the upper part of this trading range, although you did pop up here earlier to set the all-time highs. Here's the lower part of the trading range. Again, like the Nasdaq, you could certainly argue that although the trading range might be wide, we've gone sideways in a wide trading range since the beginning of the year. Now the VIX has continued to stay low, although a big green bar on Friday is interesting, but Friday, Thursday, Wednesday, Tuesday, Monday, it was a weak WEAK week, WEEK for volatility. And if we look at the dollar, I'm a fan of the weak dollar, I guess, for my stocks, especially since I own a lot of stuff stocks. And the dollar had a strong Wednesday, did nothing Thursday, and that's a shooting star. So I would expect that the dollar might see some weakness, which may actually be good for my portfolio. Let me go pull up the PowerPoint. If I look at the weekly charts, you'll be able to see maybe a little bit more how we've had major runs up, but we really, even on the weekly, here is the S&P, here is the Nasdaq, here is the Dow, here is the Russell. Hard for me not to say we're sideways. Now, if I want to be bullish on the dollar, we did have a doji on the week. Next thing we've been looking at lately has been the expected move charts. Let me pull those up. Maximize it. So remember, the expected move charts are based upon the straddle, which is priced by the option makers. And the wider the expected move, the more expensive that the straddle is. And what they're basically doing is they're selling a call and they're selling a put. And as long as the price stays within the expected move, then here's the beginning of the week, bullish and bearish expected move. As long as that price stays within those expected moves between the green and the red, the option sellers, the market makers, will make money. When the price trades above the green or below the red, you have a greater than expected move, and that hurts the option pricers. So you have to believe that that's the smart money, and that more often than not, price is going to pull back into those lines. So if we go back 3 weeks ago into the beginning of May, the week, you look at the close of the prior week, and that defines the midline of the expected move. One thing you'll see is the market is showing more volatility, and so the pricing has gotten bigger, and the expected move here is wider than the delta back here. You could see this was a bad week to start May 10th, and we traded to the red line on Monday. Tuesday broke down further below the red line. This happens to be a fib level that I thought has been important because we've been oscillating around it. On Wednesday, a horrible day, way below. Now, when you start to get this far below the expected move, you have to expect a recovery. On Thursday of that week, a bounce. And on Friday, where did we close? Right at the bottom of the expected move. So if you sold options, they most likely expired worthless, or you were still profitable, even if they weren't, if you were the market maker. I guess they'd be worthless if you sold them below and above. If you sold them at the money a straddle, you lost money on the bearish side, you made money on the bullish side, and you probably came back pretty close to break even. If you look at this second week here, we traded down, 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 up, up, and where did we stop? Right below where we started, sort of a flat week. And then this last week, in the E-minis, we moved up on the week pretty steadily, but stayed within the confines. So again, I might be selling a straddle at this line, and as long as I don't close above or below the green and the red, I will make money on that trade. The closer to the center line, the more money I make. I might just sell premium below and sell premium above, and then as long as I stay in between the green and the red, I make max return. So there are people that do those trades. I don't. I don't like to. I'm not a premium collector. I'm more of a long position, and I'm looking for moves. So this was this past week, and we traded up and we closed below the upper expected move. So that would be a trading week that was within what was anticipated. So we start here. And so how do I use this during the week? I look for reversals way below price because once this reversed, it was time to start thinking long. If I look at when it gets way above the expected move, the same thing. So this here is the E-minis. If I look at the Nasdaq Futures, isn't this interesting? The Nasdaq Futures traded up to the top of this expected move really on Tuesday, Wednesday, Thursday, and Friday, did absolutely nothing. So it stayed within the expected move or at the edges. If I look at the Dow Futures, just like the S&P, stayed in the upper part of the expected move, did not break above or below. And then if I look at the Russell Futures, actually broke above. But what happened after it broke above? It reversed and closed right at the green line. So the market makers are not stupid, and they're pricing these things so the odds are in their favor that they're going to either break even, meaning it's to the extent of the green or the red line, or they're going to make money because it's within the green and the red line. If we look at the VIX is one thing that broke through the bottom and reversed on Friday. We start a new week. And if I look at the dollar actually traded down, and by the end of the week it was up. But what happened on Friday? It reversed and traded at where it opened. So really not much of a move on the dollar this week. So expected moves help me within the week. What do they mean to me today? Well, I see the width are pretty wide, which tells me that implied volatilities are probably also high in this market. Again, I'd rather be buying options, but what I might do instead of buying long a call is I might do a vertical, because the out of the money calls, because of the volatility is higher, are going to actually be expensive compared to the in the money call or at the money call. So I'm likely to be selling out of the money calls or covered calls on my option positions just to recoup some of my investment. If we look at the underlyings, we can see still sideways move in both the 10-year and the 30-year. So rates are moderating. AD lines, this is actually pretty important. On the large cap 1000, the Russell 1000, all-time high, and prices turned up as well. Actually, this is I did them backwards. Let me fix these. Hate when I do that. I can easily fix it. Power of doing this myself. All right, the Russell 1000 on the right, you could see that the AD lines and the IWB are about at all-time highs. The Russell 2000, which failed to take out prior highs, just did, or it's getting at the prior highs. It took out the trend line. It's lagging a little bit in price, but both price and AD line were up. The NYSE is at an all-time high. The individual ETFs, as color defined here, turned up. And with rates moderating, the bonds are sort of going sideways, trending up a little bit as well. So for the most part, when I look at these AD lines and price, I see AD lines leading markets higher. So that's bullish. And then I look at the NASDAQ. Look at the AD line on the NASDAQ 100 compared to the Qs in this blue. This is worrisome that unlike the other indexes, we have a divergence here between price and AD line, and that's bothersome. And that's probably a lot because of the weakness in FANGs and some of the growth stocks. If I look at breadth, if I look stocks above the 200, stocks above the 40, the yellow line represents the S&P 500. We've come down off of our highs. We're still in the higher part, but no longer overbought. And if I look at the 3-month new high, new low, we've come off the top there. And again, every time I get up near the top, I see a reversal in the market, and we saw one here. If I look at the Mcclellan Oscillator Summation Index, this is the daily. We're looking for extremes. We don't see extremes. Look for divergence. We see divergence and zero line rejects. So you've had a line of higher highs and lower lows on the oscillator, and lower highs on the oscillator rather, and lower highs on the summation index. So we've got clear-cut divergence there. Same on the weekly, nothing new. Current buckets, we've improved this week from 50-50 to 2/3 of the stocks in the S&P 1500 trading above the midline of their Bollinger Bands, but very few stocks trading above or below the bands themselves. And we can see the center has moved to the right a little bit, showing a little bit more bullishness. There was no Hindenburg this week, no surprise. Market tone is starting to be a little bit more bullish. The reds have gone away, and growth was better this week. The top chart takes all the stocks that are, I usually do $2.50 and 250,000. And we ask the question based upon things like EPS rank, relative strength rate, group rank, ADs, boxes, etc. How did that influence growth? And what you could see is the curve starts and trends to the higher, so higher growth. That's for growth stocks. EPS rank, the top EPS ranks did the best, although sometimes newer stocks without any earnings do okay. Highest relative strength did the best, although the lowest relative strengths had some interest. And group rank, the better the group, the better you did. So that's a pretty growth-oriented. Now that was different than last week, and you can see that these growth stocks that were trailing last week, 2 weeks ago were Ds and Es, actually ones that led this week. If I look at group performance analysis, which is done in HGSI, you can see the S&P 500 actually trailed all the growth indexes, up 1.23. In orange, you see some of the IBD things and Mike Scott's Focus 3. You know, Mike Scott does this great list, him and Lee Tanner, and it really exaggerates the move in growth. When growth is doing well, here are 61 stocks in this specific list, of which 50 were up, an average return of 4.44. Now I look at my holdings on the week where I was up 2.43, almost the same as Market Smith and IBD 50. Not a surprise, that's where most of my stocks originate. Or if I look at my filtered buys and my buy watch, you could see that I had that 85% of my buys, or 40 out of 47, average of 4.47. And the filter list, I take all those buys and I run them through a number of other filters to find the best stocks. And I had 10 out of 10 were up 5.58. So when I see those numbers, I know I made money on the week, and I did. Sector strength, a lot more green than the prior week. So that's a positive. The reds have gone. And if we look in the Cue Edge tool, we could see, if you look at 5 days, that 91% of the sectors were up, 77% of the industries were up, and 67% of the stocks were up. So that tells you it was a good week. If we look at Friday, Friday was a 50-50 day, almost exactly. And that's just telling me that on Friday, the market was a little bit weaker. You can see over 2 weeks, 50-50. So last week was stronger than the prior week, and we're still relatively bullish over the last 4 weeks. If we look at how this market ended on Friday, I made the comment earlier about defense. So real estate, utilities, and staples were the 3 leaders on Friday. And notice they were the laggards on Thursday. So the market changed a little bit. Now, real estate's been up most days over the last 10 days. Financials have been stronger as well. And look at energy. Energy has been so tough because it's up and down, and it came in as one of the worst performers. So communication services, IT, and discretionary, which had been leaders, really lagged. Now, one of the things I love about Q Edge is that I can do this relatively quick, real time. And I just highlighted real estate, utilities, and staples and said, within my top 3 groups on Friday, which ones were the leading industries? There's 147 industries, and this uses the S&P 1500 database. And so I said, let's just look at the ones that were in the top 7. In this case, 5 of them were in the top 7 from these 3 industry groups. So I highlighted those, hit the peer analysis. I got a list of stocks in those groups. And then these 3 stars helped me find undervalued stocks with good earnings. And I got Spartan Nash and Kroger's. Now, I took Spartan Nash, which was the lead one. I stuck it into the Vital tool. Now, why would I bother doing this? Well, I get some fundamentals. I don't really care about fundamentals. I'm a chart guy. What I care about is that Edge is limited to the S&P 1500, while Vital looks at the entire market. I can pick what countries, I can pick the industry group, or expand the industry group to include other like stocks. So look at the industry plus. So I've got a whole host of stocks that made it to the list, including some Korean stocks, which highly unlikely will be buying. I get some basic fundamentals. The teal, I guess that's this color, tell me that this is an undervalued stock, and it's about as undervalued as you can get, and not much of a likelihood of a short squeeze. Now, interesting, look at the EPS, quarter over quarter, 1 year, 2 years, and revenue are very strong. They're green. So that's interesting. I can see in this extended industry, 86% of the stocks are bullish. And if I hit the peer tool right here, I can see the stocks now with their pure fundamentals. And then I could look at, again, the green button, the same two come up. And I looked at Kroger's rather. Spartan Nash looked like it's already run too much. And Kroger's, it's hard to see it, but you got an open box day here holding at its trend line, and you had a new person buy signal. Now, the only problem I see here is you got a downtrend line as resistance. But a short-term options play, I probably, of the two, would have picked Kroger's. Now, I mentioned the canaries might be holding us back, the FANG stocks. This is an extended list of FANG, and they're stuck here and continue to be stuck really for the most part over the last couple of months below their 50-day moving average. They've not yet broken below the 200, so they're sort of chopping around, and maybe that's the key word I should have put for a title this time, market chop, because we're chopping around in that region. Know your news and earnings. Markets closed on Monday for Memorial Day. You got the first Friday of the month. So you got, as John Person calls, the monthly unemployment report. You got some claims and other things on Thursday. We are at an interesting period of time in information from the economy. It's almost as if the market wants misses because they want to see proof that the inflationary signs that we're seeing in some of the numbers are just going to be transitionary and not permanent. A number of stocks that you might own have earnings this week. Some of the major ones are listed here. Apps, which I'm out of right now, but I may or may not get back in. Zoom. CTI Biopharma has a drug approval coming up. Splunk, Cloudera, some of the software plays, Guidewire, DocuSign. So a number of big companies here. And it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So thoughts, good performance this week around everywhere. Risk on. You can see Nasdaq and Russell Micros led. S&P, Dow, mid-cap all up, but they lagged. Friday, the market sold off some into the close and finished relatively flat. Now, there was mixed economic data. New home sales declined. Confidence index dipped. Durable orders decreased. Personal income declined. All this seemed to make the Fed happy, and those that were concerned about inflation sort of made them believe the Fed position. Now, Biden also put forth a massive spending bill of $6 trillion in the setting of high PCE, or with a preferred inflation gauge, year-over-year inflation of 4.6%. Now, if we look at the market to date, you notice the S&P is up 11.9. Something important happened this week, and that was, I think it was the 26th, which would have been Wednesday, was the 100th trading day of the year. I'll show you why that's important. I had a good week in the market as momentum and growth returned. I lightened up hedges on Monday. Do I think we can rally here? I think we can, but I'll show you why any positive feelings are muted at most. I feel like we're closer to a high than a low. Shocker. We continue to chop near recent highs. It's hard to make money either long or short in choppy markets. I have to remind myself at times like this that cash is a position as well. I'll continue to be less active with smaller positions as the markets chop, and I'll be prepared to jump quickly if and when the markets begin to trend up or down. Remember I mentioned 100 days and 11.9 on the S&P. This came from LPL, Ryan Dietrich. it was tweeted. So May 26th was the 100th trading day of the year. Here looks a chart of when the times since 1950, when the S&P is up more than 10% on day 100. So you can see the yearly returns on day 100. None of them are massive except for 75, so we're right in the region at 11.7. And then here are the returns the rest of the year. What's the important? Average return about 8.6, median of 9.3. And then percent positive is 84.2%. If you look at all years, you can see the returns are greater than you'd expect to see all years combined. And the number of positive years are higher when you have this much of a move by day 100. That's pretty exciting stuff. All right. Close that thing down. Now, I also like to look at TradeStation. And I like to look at my indexes 4 or 5 ways. Here's the E-mini. So the first thing is, I think 1, 2, 3, 4, 5. Last week I said on Monday we'd probably get a buy signal, and on Friday we had a Laguerre RSI buy. So we got them, and we had a nice move up. We've got green bar on the daily and a buy. Weekly and monthly are in a buy, blue bar, and a green bar. So for the most part, I'd say the S&P 500 futures look bullish. We're starting to show some MACD divergences here. Why is that important? Well, we haven't made a higher high yet, and we're barely making a positive MACD. So that's letting me know that we might be seeing some divergence coming. That would be bearish divergence. I've already got bearish divergence on the weekly chart. I like to come down here and I like to look at my high jump at 63. I know I have more to run before I'm likely to reverse. Dow futures, like the S&P, both Laguerre and a person buy, green, weekly, monthly buy, the monthly showing some blue. We are at 66%. So again, room to run. Russell 2000, 38%, green here. A buy, and a Laguerre RSI. And lastly, the Nasdaq futures. Last week it went positive both a Laguerre and a person buy. Interesting weekly sell. That's a little bit concerning, and we're at a 28% on the high jump. I think we're close to triggering a weekly buyback. My guess is the markets go up a little bit from here. If I was a betting man, although I think we're in topping mode, we might not be at the top of our boxes, and it wouldn't surprise me to see a little bit more move up. Now, we talk about seasonality right now. Here are small stocks. This is one of the Cue Seasonality programs. Small stocks IWM, and if you look right here, you can see that in the month of June, the average return is 0.57 on small stocks, and small stocks in the month of June are up 60% of the time. So actually about the same as small stocks do in May. And this year they were up 0.27%. What about Nasdaq? So May thus far, they're down 1.2%. And you could see May is usually up and June is usually down 0.79, although it's a 50-50 month. What about the diamonds? Month to date, and we're at the end of the month, the diamonds down 1.2. June, they're down an average of 0.77, and they're down 55% of the time. And if I look at the Russell ETF, June, all right, I'm going to go back and make sure I didn't flub that up. But Russell ETF Average about 0.57 in June, up 0.27 in May. Usually does okay in May and is up 60%. So small stocks look good. Let's go back now. Let's look at the Nasdaq, which is down month to date. And actually, I was wrong. Yeah, and does not do well in June. 50-50, but averages down 0.79. Spiders, month to date in May, down minus 1.2, down minus, excuse me, plus 0.66. Averages down almost 1% in June, down 60% of the time. And then lastly, we quickly looked at, I guess we looked at enough of those. So a mixed month coming, but not one that looks bullish from seasonality. Now let's take a look in HGSI. I started by going into market analysis groups, major markets plus. We pull this down, I got 38 things here. Then I put the top-down view on them, which is price and volume, heavily weighted to Friday. And let's look at a couple things. Let's look at a 5-day price change. So the ARKs, which have been failing, and the semiconductors, all were up 3 to 5%. So a good week for Cathie Wood. The IBD 50 was up on the week 3.5%, the 50 ETF. Things were up 3.6%. Small caps, Nasdaq's all up about 2%. So a good week for growth. We already knew that. I just wanted to look at it again. Now let's rank it by raw combo, which takes price and volume, looks at 1 day, 5 day, and about 3 weeks as a small influencer as well. And what comes right to the top? Gold, and what was the laggard? Bitcoin and the IBD 50. So even though 5 days were good, on Friday it was lagging. So let's start by looking at the S&P 500. And now I'm going to make these things smaller. Make this one smaller. I make it smaller still. All right. So let me close that for now. Here's the spiders. So as I look at the spiders, big move up from the March 20th low. We've gone relatively nowhere. We gapped up here, which was Monday, April 5th. A very nice gap. And then we've gone sideways. In fact, looking at this, we have not filled that gap up. So, is that something that may need to occur? I don't know, but let's look at this. We are at the top of the box. Now, do we break out of the box on Monday and move up to higher highs? I think it's possible, and we'll know. What I'd really like to see is an initial breakup, a pullback close to the top of the box, and then a takeout. And that's one that I'd be happy to see as a bull. I think the bearish is that we fail at the box and we go right down and we either bounce again, which is what we've done here a couple of times, or at some point, do we break down? And then I'm going to use gray because I don't think the yellow will fire, or are we just going to be bouncing around in here? So my high road scenario is we break out, retest to go to higher highs. My low road scenario is we have an assault on the bottom of the box and then hoping that the box will hold there. And then the middle is we go sideways. So where are we at right now? We're at the top of the box. So could run up a little bit more. Does that feel more like a top or a bottom? I'm thinking it's more like a top. And look at over the last 1, 2, 3, 4, 5 days. We took out that chandelier stop. That's bullish, but we have not taken out the highs set in early May. So we will see what this market does. Those are the 3 road scenarios that I might be looking for. If I look at the the Dow, similar picture, I'm afraid. The Dow also took out a chandelier stop on Friday, mobile breakout from a squeeze on Thursday, some pocket pivots. So again, unlike the S&P, if I was to draw a box here, I might try the right tool. We're kind of in the middle, so maybe more likely I believe that this one's going higher. If I look at the Russell, again, I hate to be a broken record, but until we decisively break out of these boxes, we're range bound and chopping around, which means be careful with your size, be careful with how many trades you do, and remember, cash is a position. I've been doing this long enough to recognize that I don't make money, I don't have big wins during sideways moves. Now, I could even go back here and say, when we talked to the beginning of the year, you could really extend this box all the way to the gap up on February 2nd. Things that have been resistance multiple times probably stay resistant. So until we break above this, be careful. You want to, in this type of a pattern, you want to be buying off of the bottoms, and until proven otherwise, you want to be taking profits at the top. So take advantage of the high skew rate, okay? And how do you do that? Simple. You buy a call right here, and you sell a call up here. And this call here finances part of this call. And when this premium or this call is more expensive because of a smile in the skew than the call you're buying at the money from a volatility perspective, the stock can have a modest move and you can make money. And maybe I'll show you an example of that. But why go all in something that's been in a box and is near the top of that box for this many months? So we've looked, and let's look at lastly at the Nasdaq. You could again say we're in a box. Oopsie daisy, let me do this the right way. And again, we are sort of in the middle, so going either way to me is possible. I see boxes, I see trading ranges, and I see markets that are chopping, and it tells me be careful, don't overtrade this. And again, cash is a position. Can this market go higher? I think it will go higher. Do I think it's going to break out to all-time new highs? Maybe it runs up and assaults the prior highs. Do I think it's going to go back and retest the bottom of the box before it sets all-time highs? Absolutely. Now, you notice what's coming on down here? How interesting would this be? How interesting would this be that if this thing here continues to run up, and then we see the market run up, fail, and pull back to where the box and this 200-day moving average have come together. And now you've got a major support level, and from there we go off to new highs. look, anything can happen, but the longer we go sideways, the 200-day is going to get closer and closer. It's now 9% away from the Nasdaq. I'm speaking way too much, but I still got a few minutes before my wife drags me out to the swimming pool. So that's my take on the markets. Let's look at a couple of different things. Let's start with biotech. It's a biotech time of year with ASCO. Got to break and hold above its chandelier stop. It did have a mobile breakout on Friday, and I've been long off this 200. We'll see if it can break out. Semiconductors had weakened and are now strong again. Took out the 50 early in the week. Looks pretty darn good. AMD got a lot of upgrades. If we look at the 50, if the ETF that mimics the IBD 50 is making money, then we're making money. And I would look at this and say, we are, well, I hate to do this to you. We're in a penalty box still here, and we are perhaps not as much a box. I mean, I think sometimes with technical analysis, and forgive me for those that are upset with this, you can draw a lot of different things depending on what you want it to be. Am I in a wedge? Am I in a box? Whatever we are, we're in something. And until we break out of at least these trend lines, I don't see the IBD 50 leading me to the Holy Land just yet. Fangs, struggling under the 50. If we go look at, I mentioned the ARKs did well this week very quickly at the 50, right below the 50, genomics below the 200, ARK Innovation below the 200, Israel at the 50, Next Gen Internet at the 200, Space, too early to say. And then here's our friend Bitcoin, which my son likes to trade, sitting down at hopefully ultimate support at the 200. We'll see if it can hold there and bounce. I don't know where to look on the weekend, so I don't bother. What else? Let's look at the dollar. Talked before that did it start rallying at the end of the week. Failed rally here. It's up on the week, perhaps a little bit. Maybe not. 1, 2, 3, 4, 5. Nah. Yeah. Looks like it's up a little bit on the week, but the weekly doesn't look like it's up. So maybe not so much. Let me see if I'm missing some day. Oh, never mind. When it doesn't look like it's supposed to look, and you're probably doing something wrong. So you're down a little bit on the week. On the dollar. Does this look like it's going to the moon? Nope. And the VIX, it's hard to even look at it here. We need some more reverse splits. Oh my God, look at these numbers here. There's been so many reverse splits. It's trading at what, 35 bucks? VIX not doing anything. Weak dollar, that means gold should be off the charts. Yet gold looks better, broke above the 200, riding the 8, the 17 took off the 200. Maybe a week or two, the 50 will take out the 200. So gold looks interesting. Silver looked interesting first, and you could see it broke up sideways, maybe poised to run again. It might be a good time to own some gold miners, and you can see gold miners sort of holding that breakout right now. And I have a silver position, I got some nugget, and I have 1 or 2 gold miners. So gold has looked good. Next thing I do is I look at industry groups. I know this is already getting long, and I'm tired already. I'm trying to not go forever today. Let's look at 2 up. I have 72 groups. 2-day force down, I have 18. So we're decidedly bullish. But look at what's down. Internet media, specialty retail, investment, computer hardware, airlines, home products, software, cruise lines. So you've got a mixture of high growth and recovery plays that are to the downside. We look very quickly at top waste management. This was one stock, Vertex Energy. I don't trade stocks that look like this. That's a day trade stock. If you know how to trade it, God bless you. To me, it's too risky because they always come back down. 232 million shares were traded on a stock that average volume was 11 million. So 20 times average volume. We can look at more info from the web, FinViz, and it will tell us. So they're buying a refinery. That's interesting. So what is their market cap? Okay, their market cap's 206 million. They're buying a $75 million refinery, so it's a real small micro cap. I don't trade those. That's the only one above it, so I go back. Entertainment facilities, AMC. I don't play this one either. If you look at a daily chart, forget the daily, and let's take this down and look at a this stock on Friday ran up in the first few minutes and had a strong reversal. I wonder if it's done running for now. That was a big turnaround. Not only did AMC have a turnaround, but you know, they say no one's selling GameStop and AMC. Somebody was selling it after the open on Friday. It sold off intraday as well. So maybe these are done. You could see a reversal here. Can it go higher? Absolutely. They don't follow any rules. But it looks to me like for the short term, both their moves are done. Semiconductor devices, Nvidia. I love Nvidia here. It's expensive in a market that is pricey itself. Earnings are out. They had great numbers. So I guess you could say it's breaking out to all-time highs, and that's bullish. It's also kind of near a double top. I think having a position in Nvidia is fine, but I do expect markets to pull back before too long, and this one will pull back with the market. What a run. Broke out of a sideways consolidation over a number of months. Beautiful chart. Semi-LEDs, another one of these stocks that had huge volume, 39 million shares. We'll skip it. AMD, a lot of upgrades came in, had a kahuna and a pocket pivot, two bullish momentum indicators. If you're new to me, and you want my vocabulary, drop me a note. I'll send you a PowerPoint. You can see great earnings per share growth in AMD. I like to buy it above the red line, which is the 200-day moving average. It's sitting right above its chandelier stop there, though. And Micron below the 50, and Broadcom breaking out above the 50 looks good as well. So clearly, technology looks interesting. Automobiles. I have a position in Ford. Probably time to take profits. What a big run. How often do you see one of these old auto manufacturers? And you can see it did it here, it pulled back, and it resumed its uptrend. So maybe I should sell half on Monday and let the rest run, because odds are it's going to pull back some into the major moving averages. But with electrical cars coming to the big three, certainly the big two, I guess, I think Ford, when you look at its multiple of 9 versus something like Tesla, is interesting. Tesla, would I be a buyer or a seller? You know, I have a hard time shorting Tesla. I have made money to the short side. This is a big mover. If the markets hold up, this probably goes higher. But look at that multiple. At some point, it's going to have formidable competition. I had a Tesla X. I initially loved the car. I bought my son a Tesla Model 3. He initially loved the car. I got rid of mine. He has not gotten rid of his. My neighbor had a Tesla X. She loved her car until she got in a wreck, and it's taken forever to get parts. They're going to have real competition, and the inside of these cars they feel more like my golf cart than they do a high-priced automobile. My X was $160,000, and it felt like a high-powered golf cart. I think that these guys are going to have competition. So when I think fundamentally I have a hard time being long, the stock probably goes higher here, but I do think it's going to have some challenges at some point. Other electric manufacturers like NIO, It's probably a low risk buy here at the 200-day moving average. Of late, it's had good relative strength, 97, as it's come off its bottom. But I might expect to see further resistance there. You might wait for it to clear that 200, maybe even retest it. GM, a little bit of a breakout as well. Specialty Pharma. This is a week of interest for marijuana stocks. I found them to be interesting. So here is Canopy Growth. It is a bottom fish. You're buying it from where it broke out in January. Why would I be interested? It had a new person buy, a number of pocket pivots, and a kahuna come in. Okay. I'd also be interested because look at the market catcher. The relative strength of the stock is less negative today, despite the fact the stock has come down in price. So you've got some bullish convergence. Over here, you had a doji the prior week, and then this week you closed well above it. You have a high close doji, as defined right here. So I look at this. I don't love this relative strength. I think there's something going on with Canopy Growth. What about Kronos? Very similar pattern, 2 kahunas in 3 days. Your mobile breakout from a squeeze. Aurora Cannabis, hard to see it as much, but it was up 7.69% on Friday. Hexo, another cannabis with a Bible gap up on Friday. You tell me, is something going on with cannabis? I don't know. EBS is the company that screwed up the J&J vaccine. They've actually been a powerhouse and a great company in the market for a long time. Look at these power runs. And I suspect it'll run again. They're about to get their plant turned back on. Ceros, so the ones that looked the best to me were the marijuana plays. Consumer electronics, CAS is another GameStop type play. PE of 461. Their headphones were great 30 years ago. Coppin, all right, sorry about that. Dozed off for a second. So then we get to the index. Let's move back. Internet-based services, change the index group. Lyft. This stock has held up remarkably well, considering the COVID economy. Certainly looks poised to benefit. Zscaler, gapped up, going sideways. That's also interesting. Pinterest, I don't understand that company. Zillow, and this one also looked good. I just had it's 2 o'clock, time to go swimming call from my wife. FVRR, Fiverr International, pull back to the 50. Looks like it's getting ready to run. Again, lower low, less low on the market catcher. I like that as well. I'm going to stop there and just show you some of the picks I had because I'm getting the it's time to stop message from the home team. And frankly, she's the most important person I have. So I'm going to look quickly at my buy watch. No one says it's going to be as good as it was last week. Here is the buy watch for this week. And let me change this to scorecard. And then let me call out some things that you can probably ignore right away. I think scorecard's going to kill them. Okay, let's look at industry groups. So there were a number of biotechs that started popping up. To me, this is a good season for biotech. PDS Biotech, I don't know anything about them except they're an immuno-oncology company with a very small market cap that's in the midst of a very powerful looking run here. And immuno-oncology is important. If they've got anything, somebody will buy them out for 600 to $1 billion. I'm going to look at a little bit more closely at them. Surface Oncology, pull back to 200. Looks like it wants to get a run again. There is not a surprise to me that these are cancer drug companies because this is where the market is right now because of the cancer meetings coming up. And here's Intella Therapeutics moving up off of its 50 as well. So I thought those were interesting. On the REITs, there were a lot of REITs I liked. Let's look at Service Property Trust. A Bible gap up after a 5-month base with 2 kahunas in a row. That got my attention. It pays just a teeny dividend, unfortunately. On semiconductors, expiry manufacturing, pullback at the 50, had 2 kahunas in a row, a mobile breakout from a squeeze, and really did nothing on Friday. I might be watching that one as well. The marijuana stocks I find are interesting. I've already called them out and probably already playing 1 or 2 of those right now. So like Cleveland Cliffs, I'm still liking this iron ore and other metals. Look at its earnings per share growth. If we have inflation, this might be a good place to be. I will be the first to admit that this multiple is ridiculous for this stock. It's under demand. You're buying it right off of the 50. And yes, I have a position in it. Those were some of the ones I liked. And then on the oil side, Petrobras breaking out here, 3.7% dividend. I remember 15, 20 years ago, they found some major deposits in the Gulf, and we heard they were going to take 20 years for them to actually get after them. I'm looking at revenue, which is returning. I'm looking at earnings growth. I'm looking at a dividend. And except for the fact that it's Brazil, I'm interested in Petrobras. So these are some of the stocks I like. Last week, I talked about Copart. Let me just show you what I did in Copart. It was sort of a push for the week. Let me do this. Let me reset sorting. Yes. Here's Copart. So what I did with Copart, I'm not showing my trades. All right, that's not doing what I want. All right, so what I did with Copart is show trades. Nope. I did a complex spread. I bought 125 calls and I sold 125 puts. That created a synthetic. So for $3.10, I got 125 calls. So that was a net. So I created a synthetic stock at 125. I think it was at 127 when I did the trade. I bought a protected put for 210 and I sold a call for 50 cents. Now the stock has moved up a couple of bucks, which is really nothing. And I'm controlling 4,000 shares. And I am up 2,200 on the week. So here they are. Here are the 4 trades. And you could see on my short put, I've lost money. I made my most money on my long put. I made some money on my long call and a little bit of money on my short call. So this is sort of it's a positive trade. If I add up all the costs together, I could tell you what my net is, but I don't have time for that. That's how I traded Copart. I am still long. Like I said, it was a decent week for my stocks. And on that note, I am going to say goodnight. Goodbye. Have a happy Memorial Day, and thanks again to those that serve. Goodbye now.